Over the weekend, Bitcoin crashed aggressively. There's a lot of people wondering what was going on. In order to better understand what happened, you need to understand the structural differences between the new market and the old legacy financial market. The new market, Bitcoin and cryptocurrencies, it trades 24/7, 365. It's always on. But the legacy financial system has hours of operations. It's not open over the weekend. And of course, on a weekend like this, it's a 3-day weekend because Monday serves as a bank holiday. And so going into the weekend, everyone knew that for 3 days, you would not be able to move fiat currencies from your bank into a crypto exchange to be able to buy any more Bitcoin or cryptocurrencies. This means that there is no buyer of last resort. It means that that persistent bid, that inflow of new capital as prices drop, wasn't going to be there. And so naturally, as the Bitcoin price started to fall and there were no new buyers, that meant that the price was only going to continue in free fall. And so as Bitcoin went down and down and down, it started to trigger liquidations. And that's where we saw a cascading effect. Liquidation after liquidation after liquidation. That led to not only forced sellers, but also panic and fear in the market. Now that we're on the other side of the weekend, we see that over $7 billion of losses were captured over the last 3 days. If we go ahead and we take a look here, this CoinDesk article looked at the Glassnode data, and it shows that approximately 555,000 Bitcoin changed hands between $18,000 and $23,000 price of Bitcoin, which served both as a strong support and a resistance. But the losses are ranging between $1.5 billion and $2 billion every single day. And if you look at the historical comparison on the chart, you can see a massive spike in all of the losses that investors were taking. All the way here on the far right, you can see that it was the highest number of realized loss ever in history. And so, of course, yes, plenty of investors were simply selling because they wanted to. They were fearful of what could happen. But many of them actually were forced sellers. They were being liquidated because they had too much leverage in the system. So naturally, as you begin to look at this past weekend and you realize that there was $7 billion of losses, understand that a lot of it had to do with the market structure difference between the new world and the old world. If more people weren't able to take fiat currencies and get it into the crypto systems, get it onto those exchanges and be able to buy these lower prices, it meant that Bitcoin was going to continue to fall until eventually either all of the liquidations had already happened or there was an exhaustion of the sellers. We saw Bitcoin trade all the way down in the 17,000s. We're back up above 20,000 now. No one has a crystal ball. No one knows what the future holds. But what we do know is that whenever you see a long weekend, like what's coming up in July 4th, you've got to understand that there are no new funds to flow into the crypto system, and it's likely to have significant volatility during those times. This was a 3-day weekend over July 4th, as somebody like Arthur Hayes recently pointed out. It's a 5-day break. So of course, you should understand the difference in market structure, and you should be prepared for these moments. Everyone needs to understand that when no new funds can flow from the old system into the new system, that volatility almost always happens.
Hey you, did you like this video? Great, we make 5 of them a day and post them here on this channel. Make sure you're subscribed, like the video, and see you next time.